Good evening, traders. Welcome to the Sunday Open. I'm your host, Craig Shapiro, macro strategist here at NinjaTrader Live. It is Masters Sunday. It's April 12th, 2026, and we're waiting for futures to open here. Rory is up by 2, so you could turn it off and just focus on the Sunday Open here with us now that war potentially is back on. So futures are just opening right now. And not surprisingly, we're weak after talks of the ceasefire, maybe breaking down. Iran didn't come to the table on the Strait of Hormuz and nuclear enrichment, and so a lot to get to here. But to open, S&Ps are down 1%, which really isn't not all that much. Down 73 handles to 67.85. The Nasdaq down 1.2% to a little less than 25,000. Russell down 1.4%. Not surprisingly, oil up 8.6% to about 105. I was looking earlier. European natural gas futures are up 17%. So we're definitely getting the highly correlated trade of potential for war coming back, which is stocks down, bonds are a little bit weaker, the dollar up, volatility up, oil up, gold down to where's gold? I'm losing it here. Down 2% to below 4,700. So this highly correlated trade that we've been monitoring over the last several weeks is back on. We were talking on the morning shows last week about moving into phase 2 counter trend rally. How long was it going to last? Well, now we're flipping back to phase 1. The war likely to continue. The president has decided that a naval blockade is going to start tomorrow morning at 10 a.m. So we do have another deadline to deal with tomorrow. But have a great panel for you again this evening. We were off last week for Easter. Want to welcome back in Sara, Pharm, and Pax. How is everybody doing here on this fine Sunday Open?
Great, Craig. Thank you. Happy Easter, everybody. Happy Easter to all of the Orthodox brothers and sisters, especially my wife's family. Christos Aneste.
Ready for a big week.
Amen to that.
Yeah, good week. Missed you guys last week. It was a good week. We, to do a weekend like live, but oh well.
Well, we're back into it. Unfortunately, I thought this fog of war trade was going to move beyond us, and we were going to start to figure out what's the economy going to look like, what's the Fed going to do, what was going to be the impact on the supply chains going forward, and it looks like we're back going the other way again here. So what we're going to do this evening, like we do every Sunday, is kind of go through the various asset classes. I'll talk to the traders about their setups for the week, what they're looking at, and how they're positioning things here for this middle of April. It's the kickoff of earnings season this week. We have the banks reporting. Goldman reports tomorrow. J.P. Morgan on Tuesday. Bank of America Wednesday. Wells on Tuesday. So we'll get some industrial earnings as well. First reactions to the war and implications and any impacts from higher energy prices and what the outlooks are. So a huge week this week. It's also expiry, VIX expiry on Wednesday morning, regular options expiry on Friday morning. So we'll talk about, the negative gamma regime that we're going to be back into if we keep sliding here and what that all means. So ton to get to. Let's kick it off. Sara, I'll flip over to you. How are you thinking about the setup for indices this week? Back to this correlated market after a couple of weeks of counter trend move to the upside. Now we're back, maybe finding some weakness again. How are you thinking about it?
Yeah. So last week we had a big bullish week. The setup was there. Obviously, the 2-week ceasefire postponement news obviously helped fuel that, but we like to say that price precedes news. So we kind of expected the bullish move. I did make a weekend video the week of Easter. It's all on there. But so we have a new quarter, we have a new month, we have a new week, and we said that if things were going to turn around, it would happen on the new quarter, which we did do. So heading into this week though, based on where we're opening, it's kind of a toss-up right now because we're pretty much in the middle of last week's range on all of them. So the question becomes, we're always asking, how are we going to get out of last week's range? And in situations like this, I kind of would almost prefer that we stay an inside week this week and kind of, scale the trading back. And then the following week, get a clear direction on an inside week break. But we're just going to have to see. We're going to play it by ear. They were trying to gap down by the whole market, and everything is now flipping red. So they're kind of flipping right at the open. So they're fighting it out right now. So, we're just going to have to see what we walk into tomorrow, see what color the daily candles are, and basically, go day by day based on time frame continuity. So the color of the candle, that's the direction that we want to be trading. But again, we can't rely too much on moves when we're inside a previous range, because they tend to be more fake outs than anything. And the reason I think that we exploded last week so much, other than the news, was because we had a series of 5 lower highs on the weekly candles. We had sold off for 5 weeks in a row on all of them. And then they all broke at the same time, kind of triggering a bunch of short stops and then a bunch of natural buying. So it kind of just blew up last week. So again, just got to see how we're going to get out of here. Hopefully maybe Monday we have a green 2 down hammer day, and then Tuesday would give us an actionable long day so we can take it up. But the second day of the week we get more information. So just going to kind of play it by ear day to day, take it from there.
I'm curious how you're seeing, if there's any differences or any leadership between, the Russell, the NASDAQ, or the S&P. When I was talking about a couple of weeks ago before when we were off, is just the idea that energy had so outperformed and tech had underperformed, and that there was a chance that if we had the ceasefire and energy started to fall, you would have this rotation back into tech, and maybe out of small caps as leadership. Are you seeing any evidence of that, or are you still kind of in a highly correlated indices setup?
Well, currently all the indices are extremely correlated. If you look at the quarterlies, we are inside quarter on all 4. We are still inside last month's range on all 4, and we are 2 up weeks on all 4. So they're pretty much very, very correlated. The first one to take out last month's highs is going to be the strongest one. So above this pink line. So it looks, well, last week, RTY was really close to triggering last month's highs. It didn't quite make it. And then last week also, NQ was really close to triggering last month's highs. So those are going to be the leaders. Whoever can trigger above, what was last month? March. Whoever can trigger above March's high first is going to be the strongest one. As far as gold and silver, they really haven't been doing much of anything since the news has been going on. And since, all the indices spiked, they just kind of remained flat, which is to be expected because we're stuck in that big range there as well.
So since now that you live in the perpetual land of summer, are you forgetting what month last was?
Yes, it's like I'm retired. It's like, what day is it?
Every month is June now.
Yeah, I was at the pool all day today. So
hey, that's really, really good analysis, Sarah. Wednesday.
Thanks, Max.
Wednesday, you see Wednesday as an up day. If we stay inside week.
Tuesday.
Oh, turn around Tuesday.
Yeah. Turn around Tuesday. Yeah.
Oh, that's really good. And I'm sorry about gold. What did you say about gold?
I said gold and silver are kind of just stagnant. They're not moving much relative to like what the rest of the market has been doing.
Yeah.
And I feel like it's like they've just slowed down a lot. Like we kind of like juiced the precious metals market, and I feel like people are kind of hands off with it right now. It's just not very volatile. It's not moving very much at all.
Yeah.
So nothing too exciting there. In fact, they look closer to bearish weeks.
Yeah, we'll get gold. We'll get to those gold and silver charts in a little bit. Pax, I'm curious, how are you thinking about the setup here for indices? I'm just looking at some news crossing the tape right now. The Wall Street Journal reporting Trump weighs limited strikes on Iran after talks collapse, and strikes would be a way to break the stalemate in the peace talks. So, not surprisingly, after the weekend was, there was hope. Clearly, the VIX had made a low really back down to where we were trading on February 28th, which was before the war started. So seemed like complacency was setting in, that the president's tacos were being served, but not to be had. And so we kind of walk into this gap down here. How are you thinking about the week as it could play out here?
Well, I think the indices stopped in the right spots. If on the upside, we're below last quarter's quarterly pivots in the S&P and Nasdaq, so I want to be short. I have to be honest. The way that these markets are trading, I think, are incredibly dangerous. Everything is being played out. Diplomacy is being played out on Twitter, or at least what they want us to know. And so how do we tell what the truth is? How do we tell what's right? How do we tell what's actionable? We were kind of joking. The four of us were kind of joking a little bit about the dip, the bottom pickers and the top pickers. It's a difficult way to make a living by being a bottom picker and a top picker. Now, being a bottom picker in these markets are going to pay off over the last many years, but that always does. It will run you over. You're better off buying them on the way up. You're better off selling them on the way down. I mean, who wanted to go home short this weekend? Good news could have come out. We could have gapped up another 100 points. Who wanted to go home long this weekend? We could have gapped down 100 points, which is what we're doing. So, it's for us, we're traders, and I think the majority of us are independent traders or retail traders. It's our job to have a plan, which is why I thought it was very interesting in listening to Sara lay out hers, and I can't wait to listen to Pharm's too. It's very important that you have a plan. If you don't have a plan, don't trade it. And guys, hope is not a plan. Putting them on and hoping you're right. It's you'll be right a bunch of times and you make a lot of money, but chances are you're not going to keep it. So, okay, all my weekly warnings out there. I want to be short underneath 67.95, in the S&P. I want to be short from 67.94, not because it's the high for the week, but because that was last quarter's quarterly pivot. Nasdaq, I want to be short from 25,130 because that is the quarterly pivot. I'm not those things. I am flat. I'm looking to see what we have tomorrow on the reopen. If I have a chance to sell 67.95, I'll sell them. I think gold. Gold is doing nothing. It's trading. It's trading in huge ranges. I think gold is a great technical trade right now. It's stopping in the right spots, both on the upside and the downside. If you wanted to, I talked about this on my Friday show. If you wanted to pick a top, you get short at 48.60 with a stop just above it. If that's the case, you've got off the lows, you got $140 and $150 into it. So, it's just a matter of picking your spots, managing your risk, having a plan, keeping your plan, and making sure that you're here for the next trade. There'll be big trades in your future if you do that. Buy them on the way back up, sell them on the way back down, have a process, have a plan, and trade it. So that's it. I can't wait to hear what I feel like I say this, like you said, here we go, more war, Craig, and that cannot be more true. And so I feel like I'm saying the same thing every week because it's important. Now, there is a lot of money to be made in these markets if you're patient. You don't have to trade every day. You don't have to trade every wiggle. You don't have to trade every move, and learn what the difference between a wiggle, a move, and noise is. And stay away from the noise and have fun doing this. This is the greatest business in the world when you pick your spots, manage your risk. You'll be okay. I
think that fundamental or human traders or macro traders or, just your broad fundamental guys who are not, let's just say, not day trading, or portfolio managers have just gotten exhausted by the highly correlated nature of the asset price movements that we had. And then over the course of last week, as there was hope that this was maybe getting put behind us, you started to see a little bit of dispersion, and things were moving a little bit more on fundamentals. So that in the companies, in the sectors that were working, and then so into this weekend, I don't really think anyone was particularly prepared for this to go the other way. Even though there was risk, it seemed like the way we rallied into close. And we'll talk to Pharm about how he's thinking about how last week looked into this week, but it just didn't seem like people were prepared for this to go the wrong way. And so here we are again, back to trading a highly correlated tape where assets are largely moving as they had before, which is oil up, vol up, stocks down, bonds down, gold down, dollar up. And so we're back into that exhaustive phase, and we're going to be waiting on Trump tweets and maybe some action. Right, we'll see if missiles start to fly. There's obviously been threats put, and what the Houthis in Yemen have said is that if missiles start flying again, they will start attacking further and may close the Strait of Mandeb. So that would create more issues for the oil market. But a lot to think about. Pharm, I'm curious, kind of, let's say going into the weekend, how are you thinking about the setups? And then now with the news, has that changed? I'm sure it has, but to what degree? And how are you thinking about the week to start?
Yeah, I mean, I'm a little bit annoyed that we ended up getting the news and gapping down, not because I'm positioned wrong, but I liked how things were starting to subtly change. On Friday, I saw really the first signs of some interest. You probably saw my post on X with the bat signal. I don't know if you followed long enough to know what that means, but I was summoning my favorite sell program that I nicknamed some of them because I'm a nerd, but we nicknamed him Druck. And the setup was there. The setup was there for this sell program to come in. And sure enough, it looks like, we got some selling on Friday. Now, I hadn't even taken out a prior day low, right? So this is just like the very, very early, very, very subtle, that would take me many, many hours to explain, suggestion that we might be trying to find some balance, which would require taking out a prior day's low. So I was expecting us to come in and take out Friday's low. Now here we are, gapping down below Friday's low is very annoying to me, just because I like to be able to trade it real time, cash hours, see what cash participants are doing. But basically, you can see up top here, we're not even seeing the whole week, right? So I'll have to zoom out at some point here. But you can see just up top, we've got two relatively unique distributions here in this upper range. And so that was going to be the key pivot coming into the week, right? So if we lose 6837 and 6846, which would be inclusive of Friday's low, then we were probably looking then for Wednesday's low, or at least 90 to 93, which is what I'm using as a weekly level instead of Wednesday's low. Below Wednesday's low, everybody knows we have this huge gap, right? This huge RTH bull gap, which runs all the way down to what, like 6660s, basically. So it's like absolutely massive gap. So that was the first level I was going to be looking at, was this 6837 and 6846, which could absolutely still come back into play. If this 90 to 93 is reclaimed, we probably end up there, I would say. So for now, all we've done is just dip in to this bull gap, right? We found responsive buyers thus far. They're struggling to reclaim this 90 to 93 spot. So for me, for my plan, as this plays out, once it started to look like we were going to get a gap down, you're going to get a low. It's going to be bought. We talked about this before. Like, it doesn't matter. It's going to be bought. And then the question is going to be, do we proceed then further into this gap, and how much traction do we actually make, right? Because we could get a partial gap fill. Maybe something. So the gap ranges 67.80 ES all the way down to 66.62 or something crazy like that, I think. 60, call it. So it's a monster gap. It's 110 handles or whatever. So
66, 64 it fills.
Yeah. So big gap, right? So a lot of people will look at a 50% rule, half the gap fills, whatever. And it's bought, and it starts to look like a daily high or low. And then things get tricky as we come back up here. Now, for part of my plan, part of the reason, it's because I'm a bear. I don't want us to gap down, actually. So part of the reason I did not want us to gap down coming into, before we got this news, is, to me, the more volume that was established up here, the more likely it was that a lower high could be defended below here. It still can, of course, right? But the more volume, obviously, you have trapped off sides. the more likely it is that sellers may get out of break even, or I'm sorry, buyers might get out of break even. If they get back to their break even, sellers may step in and defend and find further traction down into this gap. So this is definitely the trickiest situation here, especially if we keep finding some traction down into this gap. I've got another yearly level at 67.34 to 40. I don't really care about the levels as much on a situation like this. In a gap, the entire thing could be reactive. And so if we do come down then and make new lows, like there's still going to be a point at which it gets bought, Asia session, Euro session, whatever. And what's going to matter on Monday is, do we take that out? Whatever the overnight low is, do we take that out? And that's going to tell us that the market is weak and there's potential for completely filling the gap. I mean, this is a lot of structure that could potentially clean up, right? I would say the participants, like broadly, at least the NAAIM cohort, they haven't done shit in like 3 weeks. They've been frozen. They've been paralyzed. They don't know what to do.
The what? The what?
NAAIM, so National Association of Active Investment Managers, I think it stands for. Basically just hedge funds, right? What's their long short exposure? It has stayed the same this whole time. So it's like they basically hedged for the way down, probably closed some of those hedges. They don't know what to do. So they didn't degross into the lows, which is what I love to see. I want to see longs puke into those lows, right? Because then they got to regross all the way back up, and that would have been beautiful. They just were paralyzed. They didn't know what to do. So there's a lot of uncertainty in this market. Participation was getting very, very low up here into the highs. NQ hit my yearly level, which I know all of you have from the times I've shared those high frame charts, which was, I'll flip over to NQ now, actually, and we'll capture that. And then ES basically was coming close to the next yearly level, and didn't quite even make it to the yearly open, so which I know Pax watches intently. NQ, let's zoom, resume. Wow, this is struggling to load. All right, so 25,369 to 25,469 is a major yearly level on NQ. And above there was basically the scene of the crime type thing, 516, 538, which if you've been watching the show for a while, you'll recall there had been a lot of buying there. Once we lost it, that's what triggered the weakness on all indices. For ES, it was basically a loss of 6,800. You can call it 6,790, right what we're flirting with right now. So that was a big spot not to be long into that spot, not really be messing around into that spot. So if you had added long exposure down at the lows, adding some hedges or pulling off some of that long exposure was, I think, a good idea. And that's what I did. That's what we did. Similar situation to ES up here up top with sort of two relatively defined distributions. So I was going to be using 25,111 to 25,145 as sort of a quote unquote pivot, I would say, looking then for where are we at, right? Wednesday's low. So this is exactly what I kind of expected before the show. We're going to gap, we're going to sweep Wednesday's low, and then we're going to find out. So this is a giant F around and find out situation here with the bull gap. If this can sustain bids above, this 24,956 to 969 anyways, broadly Wednesday's low though, then NQ can come all the way back up here and test, sort of this pivot here, right? So this does make it tricky. And again, I feel like it would have been much more likely that this back test was defended if there had been more volume here. Now it starts to seem, potentially likely that they could recover this and run it back up, especially, what's going to happen, right? We're going to blockade the strait at 10 a.m. or something. So like 9:57 is going to come around. It's like great news, upon the request of like the prime minister of like, I don't know, whatever country you've never heard of. We've decided to go ahead and hold off on this blockade, or something like that is going to happen. But mindful of this bull gap, can we get traction wherever the overnight low ends up? To me, I need to see sellers willing to initiate below that during the cash session tomorrow. Otherwise, if we start just reclaiming Wednesday's range, I think all we're doing is forming a multi-day balance range between Wednesday through Friday's range of last week. And there's nothing bearish about that at all. So what's going to be the ultimate decision point is going to be then if that multi-day balance forms, which it's going to. We will have the daily imbalance if cash hours trades below Friday's low. They could run it all the way back up tonight, so maybe that's not the case. But if that is the case, then the decision is, do we break that multi-day range to the upside? with continuation, or do we break that range to the downside with continuation? And that's what decides things. So again, that's why I didn't really want this to gap down. I wanted to see volume develop organically into some kind of a multi-day balance. Then we get the break, or failed breaks, right? I always prefer failed breaks. But so for NQ, that's the first order of business. Again, plenty of spots within the gap that could hold. But if we come down here, fill the gap, like bulls still aren't dead. Like to me, until we are back and I mean like firm resistance back in last week's lower distribution, sellers don't really have anything. Bulls are going to be looking to buy this dip in this bull gap and plant some kind of a daily higher low. So again, trickiest situation is upon us here, and no real surprise. The trickiest is always the most likely, I suppose. So we'll see how this goes, but I can't be too bearish until we're back in this lower distribution at least. And it's hard for me to be bullish. It was hard for me to be bullish anywhere up near 25,369 to 469, and especially 500s. I will not mess around with that spot on the long side. So let's see how this night goes. And again, watch whatever your overnight high is and overnight low is on these big gaps, especially coming off a test of a bull gap. See if cash hours can trade below the overnight low or above the overnight high. And that's going to be pretty telling for how the rest of Monday is going to go, I suspect.
Yeah. No, I had mentioned on Friday too that I had placed some IWM puts back into the present pocket, kind of added to that position for many of the reasons that you were talking about. But and I was thinking, we're kind of through this part. We're through 2/3, let's say, or maybe more of this counter trend move, and then we're eventually going to start to trade the other side of the economic impact here, the strait being closed for longer and earnings getting hit and the Fed not being able to do anything about it because the labor market is kind of holding on and not really giving them reason for cutting, especially after, things like last week's CPI print where we printed a 0.9% headline month on month. And yes, core was a little bit softer, but the Fed's not going to be thinking about cutting rates when headline inflation is annualizing 10% a year. So the gap down here on a kind of shift back to the war is maybe back on, complicates things. It makes it, more difficult again because we are subject to the tweet risk and the eventual, okay, this thing's over again. And so I know there's some discussion in the chat about this blockade, and that's maybe this is the us ratcheting things up, and then this will be the end of the situation. Look, can you imagine the situation? Let's say tomorrow evening we've implemented this blockade, and a Chinese vessel passes through Hormuz after getting clearance from Iran, and then gets blocked by the U.S. Navy. Then what? I don't get the sense that that's a risk-on scenario. If Chinese ships and Chinese naval ships are going to be in the region and already are in the region as well. So, I'm obviously not rooting for something like that, but you can imagine kind of, this crescendo where we're ratcheting up the rhetoric and the activity, and Iran's going to do the same, and then maybe China does the same. So I don't necessarily think that the first order reaction of that showdown is going to be risk on. But we'll see here. But look, just another look here. We're about a half hour in, and we are sliding a little bit more here. S&P 67.75 down 1.2%. The NASDAQ to 94,959 down 1.3%. The Russell, not surprisingly, the underperformer here, down 1.9% to 25.94. The dollar a bit stronger, 50 basis points against the euro to 116.67, 34 basis points against dollar yen to 159.81. Keep an eye on dollar yen at above 160 if that's what we get. We've talked about this before. Japan, massive energy importer, Korea as well. And so currency weakness there can accelerate dollar strength and kind of lead to a little bit more of a risk off flavor. And the big reason for that is energy, and oil is up 8.4%, 104.67. So not at the worst levels there. The VIX making a high, April VIX at 22.12. Again, we made a kind of a trading low into Friday as volatility had sort of been eradicated from the war, which is a bit surprising. So I wanted to flip here just to the sector outperformance for the week. Obviously this will look a little bit different tomorrow, but not surprisingly, given the energy fall up until Friday, we'd seen energy underperformance here, right? I mean, XOP, XLE, that's the EMP companies and the energy companies down 7% on the month, respectively. And semis have been the big outperformer, up 14% on the month. The Microns, the NVIDIAs of the world, right? As AI compute story continues to accelerate here, we've seen this shift back into the hardware names, and then IGV, a notable underperformance. The software names continue to be weak. And so even on the bounce last week, to see software names down 7% on the month there have been horrible, right? You could see them down here 29% for the year. Gold miners were better last week, industrials, banks, IWM. So, but we'll see, right? I mean, now that we're moving into earnings season, we're going to get more single stock dispersion. The banks are heavy reporters this week across the board. With Goldman tomorrow, JP Morgan. And so, not that the banks per se are impacted by the war. Market will be keen on hearing about their private credit exposure and any outlook on margins, net income margins, just from the fact that we've seen this big sell-off in the bond market. I know Pax will talk about that in a little bit, but I wanted to just shift back here to crude. Because crude has been what's been the big driver, right? I mean, for the last several weeks here, markets have been keen on the oil price. And so, Sara, just shifting back to you for oil, what's the technical profile in your view here? Obviously, we haven't made a high, for quite some time. The deferred crude has been a bit stronger. Brent's been a bit stronger, but for WTI, how are you thinking about the setup here?
So we are still stuck in this 2-day range that's in this gray box, but they are building us an internal broadening formation where we've got, so this is the big range, right? That box. But in the range, we have a high, a low, a new high, a new low, and they're coming back through. So likely trying to come up and break through that range through the upside. What does the quarter look like? We're still inside quarter, still inside month. So still, like I said, stuck inside, but if we can get above that, then I still think we could see all-time highs for oil. I know nobody likes that, but it is what it is. I don't make the charts.
You don't make the rules.
Yeah, I just read them. But yeah, so it looks like we're trying to go up and take out last week's highs as of now, especially with this gap up, and the gap up is being bought. So it looks kind of to me like what happened was oil closed weak on Friday, and then everybody's scrambling to close their shorts because of the gap up. And then, natural buying occurring. So if we go to the week, you're going to see the week is green. So we've got sort of full time frame continuity from the quarter. No, all of them. The year is green. 6 month is green. Quarter's green. Month is green. 2 week is green. Yeah, we've got full time frame continuity. So they're still buying. So the big buyers are back buying this week. As long as we can stay above the open. So 102. As long as we can stay above 102, they're buying oil this week, 2-day, right now, and they're trying to come up here to 117.63. And then last quarter's highs, 119.50. So they're trying to go up there, and you've got a double top up there now. So that is a nice little target, and I like to make my charts cute and draw little targets. So there you go.
Yeah, I mean, Pax, I'll get to you next just on the energy price. But I think one of the issues that is risk off for equities is the fact that deferred crude December contract is very close to the highs from earlier last month. I'm looking at December crude contract high of 81.01. We're only $4 away from that here at 77. And so we're talking about a market and an economy that's going to have to deal with $75 plus oil now for the rest of the year, right? And so if you think about the consumer, gas prices being where they are already. Diesel prices, I know Jimmy talks about that almost every morning. Ultra low sulfur diesel goes into basically everything, trucking and shipping, and so big margin squeeze for downstream transport companies, and then passed on to retail, and then that eventually passed on to the consumer. And so the longer we go in this elevated energy price environment, the more likely we're going to have negative earnings revisions accelerating here. So that's another headwind for the economy and headwind for equities. And so, but also then that's been part of the reason why energy stocks, broadly speaking, have continued to outperform, because they will benefit from that elevated price environment for sure. And look, I mentioned this on Friday, the rig count's not really growing at all. Companies are not reacting to the higher prices. Certainly, in the U.S. companies, they're not bringing on rigs, and so obviously it's going to take time. And the more we see elevated crude price environment for weeks and months, then eventually maybe we'll bring some more rigs on. But there's no real supply growth story coming down the horizon here if the strait stays closed or throttled by the Iranian Navy. So a precarious situation for the economy every day that continues, not just for oil, but for LNG, for fertilizer, for helium, for sulfuric acid. That's another big one people are focused on here, precursor for fertilizers. So definitely some negative implications for the economy and then for risk assets. But Pax, oil, something that you've been trading at all or looking at specifically here? Any big levels that we should be mindful of?
Oil. I don't know where to start. Oil is a great trade. It's been a great trade. It's been oil has been the best trade of any of the markets, I would say, in the last couple of weeks. Opening ranges have been huge. Picking levels is going to be difficult, I think, because they just overrun them. So old highs and old lows are important. I don't understand how so many dip buyers in the indices can continue to neglect crude. Everything looked so rosy last week, and here we go. Everything is rallying. It's beautiful. Crude's getting whacked. Crude traded down to $92, and it didn't get any lower. And maybe lower by change, but every break in crude is a dip to buy, and none of that is bullish long term for the indices. It's going to drag on this. It's going to be difficult. And all of you guys that are out there, flexing your muscles about buying everything in the indices, you have to keep in mind the long game. From a trading standpoint, when this does start to drag and we start to see the indices sell off for fundamental reasons or macro reasons, why would you want to fight that and try to pick like a 5 or 10 or 20, 30 point, 40 point standard deviation move, whatever that is, when you can easily have been short from bigger levels all the way down and taking profit? And when people start to puke their positions, when you're talking about the funds starting to puke some longs, and then starting to turn around and get short, well, we're looking at more than a correction, aren't we? I just missed that shot. Anyway, it's it's the end. Justin Rose finished. Now, Rory's going to walk off with this as long as he doesn't get in trouble on that 18th.
Still 2 up with 1 to play. So I think we could, he's pretty good. I think he looks good.
He got in a little trouble just a second ago, or it could be trouble anyway. So anyway, I think crude is going higher. You got to be looking to buy dips in 117 up to 119 just to start. Like Sara was saying, up to all-time highs. Why not? Why not? The Strait of Hormuz was open February 24th. It's not open anymore. It's not bullish.
Yep.
It's not bullish. It's not my retirement accounts are not. I am not long stock, not at all.
No, I mean, look, we talked about this on the morning show a ton, just about the time of the month that different news items hit and the implications for options activity and expiry. And look, I mean, we had the quarter end dynamic. We had that big JP Morgan strike on that put strike on the 31st of March, which we were down into it. Then we kind of rallied through that day. Then we got positive news, which accelerated the move to the upside. Now, last week we're the week before expiry, it's very tough to get the tape down. In the week before expiry, we have a lot of hedges that get bought back. Obviously, there was a ton of hedging, going on for April. Some of that positioning was lost. We shifted from negative gamma into positive gamma as we pushed through last week, and so it becomes very difficult to break the indices.
Yeah.
You need like an acceleration of incrementally negative news. And if you don't get it, you just get levitation because there's so much structured product demand out there in the zero data expiry crowd. And so you get this sell vol kind of every day, it levitates the tape. And then as you push through this week into expiry with Wednesday VIX expiry and Friday, as you get to that tail end of this week, you start to lose a lot of that positioning, and it allows the market the chance to trade more fundamental, based on news. Human players and fundamental players have the ability to overwhelm a lot of those flows. We're really looking forward. I'm not sure if you guys know this, but Jem Carson will be joining us down in Miami on this weekend, and we'll get a great chance to hear from him about the flows. He's the godfather of the flows. He's really been instrumental to my understanding of a lot of what's going on here. And so, but look, as we push through this week and as we start to lose some of that supportive flow, if you continue to get a lot of the negative information coming out of DC and Iran, then you've increased the chance that equities will catch down to, where crude has traded, right? And where bonds have traded, approaching 5% on the 30-year, and where the dollar has traded, with the DXY being as strong as it's been. So, stay tuned as we push through this week. It's a big week for expiry with the Wednesday VIX and Friday regular expiry. So, but Pharm, are you focusing here at all on crude? Any key levels? Is it helping you to stay in or get out of equity positions when you see different things happening in the crude market?
Yeah, I've definitely had to keep an eye on crude, but Craig just said it's that time of the month, which explains some of his discomfort as on top of his prison pocket being filled with IWM puts. It's causing just a little bit of additional discomfort because of the supportive flows, I of course mean, and nothing else by that. Yeah, I've got crude up. And you can see, right, so crude had this nasty move down, obviously correspondent with the large rip higher in equities. And I think it was Pax that said it, like, okay, we came down to 91.69 to 93.07, that level that I've been using for quite a while. You recall way back a few weeks ago, I said, I thought equities could come under pressure if crude sustained above that spot. And it held again. So they have not broken this back down. You can also see, I know Pax remembers the 103.69 level. We can see we got the big move that came off of that. But this last week that we're focused on, right, is just like equities, right? You have a big double distribution profile overall. The equities had a clear, double up here on top of a lower distribution way down at the bottom. Crude is different, of course, spent more time down at the bottom. So a clear break away from this lower distribution gives crude the opportunity to sort of retrace some of this thin structure from that move. And it's hard to imagine that if crude does retrace this structure and finds acceptance back into this upper distribution, it's hard to imagine that equities don't find acceptance back in their lower distribution. But we have seen a bit of a disconnect lately, right? It hasn't been quite as correlated as it was, right? I mean, like you were effectively trading crude on the 5. If you like a 5-minute chart on ES, it's just like inverse crude for a while. It has not been the case. But I think clear acceptance above this 109.19 to 110.17 range, roughly. I think equities are going to come under tremendous pressure. I think while crude makes this decision here within this thin structure, I think maybe equities can make their decision as well. If this gets stuffed back down below, just call it 100 if you want to make it easy, then we could see some weakness back towards 93 in theory. And that would certainly be supportive for equities. So I'm definitely watching to see, like, as equities sit within their bull gap, how is crude going to respond within its corresponding thin structure? And I think Craig was good about calling this out originally. It's like, okay, well, this was just weeks ago, right? Everything had the same structure, right? It was either downside or upside across like all assets. And the point was like, hey, let's watch and see which one like breaks first, right? Like which one leads, which one lags, which one seems weakest, which one seems stronger based off of that structure. And I think that's important to look at here. And I think the last thing you want to see is, for example, equities underperform, meaning like they're actually trading more to the downside than crude is to the upside. That would be like the worst case scenario, I would tend to think. I think you would probably want to see crude be a little bit stronger and equities be somewhat resilient. But generally, we've been in this buy the dip market for a week, anyways, a week and a half on equities. The most obvious sign that you're ever going to see is on the way down with equities. We were getting all these positive tape bombs, right? Trump would put out some kind of news or like, oh, it's going to get better, or like the war's over, stepped on, just completely and utterly stepped on, right? And then we made new lows. Like that's when you know you're in a sell the rip market, it's going lower. And then the last week and a half, every time you would get bad news, you'd get some like tiny little 5-minute candle, like a sell for ants, and it would get immediately bought. That's how you know you're going to buy the dip market. The market is strong. So look for that to change this week. If we get some kind of, good news, we mentioned the 10 o'clock thing. I'm half joking, but like not, right? I mean, they'll probably come out and put some news out that maybe it's not going to be a blockade, right? Does the dip get bought on crude? Does the pop get sold on equities? Maybe you have a change in regime back to selling rips and equities and buying dips and crude. So those are kind of some of the softer things that I look at. These are the levels that I'm watching that you can just screenshot or whatever. But it's definitely going to be important. And we still haven't even seen it bleed over into like ag prices like at all. Like I've been trying to be long corn. It's been an absolute steaming piece of shit filled with corn kernels. But I expect it to perform well. It's been like my worst trade in like a really long time, but I'm holding it. But we haven't even seen like any of these secondary impacts from elevated crude, fertilizer prices, all that kind of stuff. So, we'll see how this goes. It doesn't sound like it's ending anytime soon, but definitely watching crude and feeling pretty cozy about getting out of most of my energy shorts anyways, for sure.
Yeah. Well, we're 45 minutes in. If you're just joining us, we've been through equities, we've been through oil. If you want us to take a look at anything else, definitely put it in the chat. Happy to answer questions. But we're waiting for Rory to put another green jacket on here. I know many people are focusing on that. We're excited to get to at the close here. We'll be transitioning over to the crypto closeout with Trader Mayne and Ponzi Trader. So it's definitely stay tuned for that at 7 o'clock. But we haven't really talked. Let's briefly get to gold. You guys both mentioned it a little bit earlier, but maybe Sara, what's the just kind of the quick and dirty here? How does the gold chart look? How does silver look to you? And can we assume or think that it could diverge from equities here, or are we just kind of going to be trading the flavor of the highly correlated asset class trade here?
I mean, we're how many days through them? Let's see. We are 5, 6, 7, 8. Only 8 trading days through the month. But crude's just a little, or gold's just a little bitty doji right now. Like compared to, the big green candles and everything else, it's just not moving. There's just, like I said, I don't have much interest in it right now. It is stuck inside last month's candle and probably will stay stuck all month. So I just don't have any interest in that at the moment. Unless we can trade below last week's lows and start coming back down through all this stuff.
It's also last week's lows are also this week's lows so far, 46.26.
Yes, they stopped exactly. Oh, they did trigger it, but they're not below it. So they did trade 2 ticks below last week's lows, but they're not below it. So in order to be short, you got to be below last week's lows. So below 46.26.2. Because if you're not, I say the same thing over and over and over every week. If you're not below it, then you risk going outside week. So taking out the highs, and you would see that on a daily time frame. So for instance, if this candle closed like this on Monday, on Tuesday, you would look to go long and target last week's highs. And this would be an outside bar of last week's range. So that's always why the line in the sand. You can be bearish below it, but if you're not below that orange line, you've got to be long.
Yeah.
But again, still just not moving a ton. So I don't love it.
Anything on silver? Kind of been
same story, except silver's more stuck. It's
Yep.
nowhere near last week's lows yet. So same exact story. Just there's better things to trade right now, things that are moving. I wouldn't waste my time over here.
Yeah.
I'm with you.
As
Yeah.
in, don't trade it, or just
Yeah.
yeah.
I wouldn't be trading it right now.
Yeah, I don't know that. I mean, there's obviously, some macro fundamental story here, but the momentum trade we had earlier in the year,
Gone.
within silver, that's completely gone. It's dissipated. It's not. It's kind of off the sheets. I don't really think people are particularly focusing on silver. You'll eventually get fundamental guys who have longer term view in there, but not too exciting now as everybody really focuses in on energy. But Pax, any key levels there on gold?
Yeah, gold. I think gold is a great trade. So 46.26 last week's low, the overnight low is going to be, I mean, if you guys are dip buyers, that's where you're going to buy them with the stop just below it. The traders in my group are short at 48.60. We made that high. 48.60 is the dividing line. Above 48.60, too close is above 48.60. Triggers a move back up to 56.26. Not right away, but eventually. As long as we're below 48.60, that takes us back. That could take us back down to 4,100. But I mean, ultimately, not ultimately. That's ultimately. As long as we're below 48.60, then we can target. Oh, he's in the beach. I didn't see where the ball went. That targets down to 4,100. With stops at 46.26 and then 44 evenish, like 44.40. So I don't know. I think gold is a great trade. Gold is moving. It's got huge ranges. There's good volume. So like we were talking about before we came on, there are you can get out. You can get out of stuff. I saw somebody talking earlier about blowing a Lucid account. I don't understand why, but I wanted to make the point. I don't know how those work, but I do want to make the point though that everybody in this environment needs to check your stop settings and make sure that your stop settings are stop market orders and not stop limit orders. I think that a lot of you don't pay attention to those simple things that ultimately can save your accounts, whether live or funded. So do that, okay? If you blew your account earlier. If you blew your account earlier because of something like that, or I just X'd out. I just X'd out of the Masters. If you've blown an account because of something like that, just please make sure that you've got them set. Okay, stop market orders always stop market orders, and always use stops. I am always disheartened and saddened to find out people that don't use stops. So gold, if you want to trade gold is along, at least on an overnight basis, along at 46.26, not along at 46.79. 46.26 would have stopped just below it, because if we take out that level, we're going to go lower. If we trade back up to, if 46.26 holds, we should see 47.50 and then 48.60. And if you get up there, then you've got trade selection again. Be patient, because gold has got huge swings. Bonds, the 30-year bond I want to mention is right at its the quarterly pivot at 113.10. 113.30 is very pivotal. We stopped there Friday, and now we're below 113.10. So you got to be short bonds. This, this is an interesting setup, and it's going to be an interesting week.
Yeah, no, I mean, I had been looking for gold to start to diverge from equities, and you started to see a little bit of that in some regard, right? You thought, ceasefire, maybe gold wouldn't do as well because the geopolitical risk premium would dissipate, but gold traded fantastic, kind of in line, even now performing on some of some of those updates for equities, and so. And the reason I liked it was thinking, look, the economy is going to slow. There's going to be, the potential for more Fed rate cuts coming as the labor market slows and the consumer is weak, and that would be bullish for gold. And so I'm continuing to look and see if gold can hold on here. It's obviously not doing that this evening, down a little over 2%. But Pharm, any key levels on gold as we get close to the end here?
Yeah, I'll spit them out, but I'm not going to pull up the chart. I tried, and Ninja did not like it. It had a seizure. But I agree. below basically the current low. I think you're coming to 45.69, basically 45.39 maybe. But broadly, if it holds, I would say 47.59. I think Pac said 47.50, 47.60 maybe. But I would agree that would be a big test here. But I also have very little interest in trading it right now. It looks to me like it's really just kind of filling in some thin structure from March. So you're going to get a lot of two-way trading at times and potentially some choppiness. So hopefully if you're a gold trader, I just jinxed it for you and it'll be some amazing clean trades, but I don't really think so. I'm not very interested in it at all.
But yeah, it's the fundamental picture looks to me still looks great, but yeah, I agree with you. It's just kind of like, maybe there's better things to do. Unfortunately, we're just kind of back into this nonsense, right? We're back into this environment again, where the risk to the geopolitical risk is rising again. We don't know exactly how the president's going to react to this. We don't know how Iran's going to react. We don't know how Israel's going to react. So a lot of uncertainty, and again into this 10 a.m. deadline tomorrow, where the blockade's supposed to start. Who knows? It really, anything can happen. But 5 minutes to go here before the crypto close out. Oil remains the stalwart outperformer, up 8.5% to 104.68. The VIX is still strong. April VIX up at 22, which is up close to 10%. Bonds remain soft. 30-year yields approaching 5%. We had auctions last week, which weren't great. They weren't horrible, but they weren't great. No big auctions this week, just Bills auctions, and then next week we get auctions again. S&P's down 1.15% to 67.77. The Nasdaq down 330 handles. The Russell down 1.7%. Gold down 2.3. As far as the macro calendar is concerned this week, it's kind of B rated, maybe even C rated data. Not a ton really going on. New home sales on Monday, NFIB small business survey on Tuesday, along with the PPI, which is supposed to be incredibly hot, up 1.1% month on month and up 4.6% year on year, and core up 0.4% and 4.1% year on year. So look, the inflation is not going anywhere, and that's really going to hamstring the Fed's ability to provide any easing to an economy that's probably going to start to need some as we transition through to to the end of the year. Certainly the president's going to be looking for interest rate cuts. There was some talk that Kevin Warsh hearings were going to start this week. They're actually not. They've been tabled again, so not exactly sure when the start date's going to be there. Powell's last meeting will be in a couple weeks. Fed goes into blackout on Friday, and then we get the Fed meeting in 2 weeks after that. But we do have 15 Fed speakers this week, including the Beige Book on Wednesday. So a lot of nonsense from the Fed, not necessarily market moving, although we will hear from Governor Waller on Friday, and he will be the last word from the Fed and how they're thinking about the April meeting or cuts later on this year. So keep an eye on that for that. That's also expiry Friday. I mentioned the bank earnings. That'll be a big market mover this week, and some industrials that are reporting. So a lot going on, and a lot of the headline stuff, obviously on the geopolitical. But to close it out here before the crypto closeout with Trader Mayne and Ponzi Trader Sara, Bitcoin. As Jimmy likes to call it, the Bitcoin. What is the Bitcoin telling us here? And we talked about Bitcoin for every week, and how Bitcoin had been a laggard before the equity markets fell, and Bitcoin has been more stable and showed some promise over the course of the last few weeks here. Clearly, today down, or over the weekend down a fair bit given the geopolitical news. But any thoughts here on the charts for Bitcoin?
Yeah, it's doing absolutely nothing. It's just tightening up. We're double inside month. We are still stuck in this weekly candle here for 2, 4, 6, 8, 9. It's been like 9 or 10 weeks of sideways action. I don't care about Bitcoin until we can break one side of the pink lines, and either I would prefer we break above and then come down and take everybody out. So like fake out the bulls and then puke all the way down. And so we can start getting to that 49 level. That's what I would want in a perfect world. But no interest in it until it can break above last month's highs or last month's lows. Yeah, because it's just chopping around inside here. Not too fun for me.
Yeah. Anthony had mentioned during the week just a lot of asset classes and prices had moved back to like the middle of the ranges. And it's interesting as I've been listening to us kind of collectively talk, not too much interest to trade Bitcoin or gold or silver, or it's where, again, I think there's like a degree of exhaustion here. And now that we're getting back to these highly correlated asset price movements again this evening, it's like, oh, here we go again. Pretty frustrating. And if we're going to be dealing with the deadlines of 10 a.m. and the potential for a delay, and what does that mean? I mean, it's just, I don't know. Not really looking forward to that. But Pharm, any last thoughts here on Bitcoin or anything else? Any other personal insults you want to throw my way? Let's let them have it here before the end of the show.
It comes from love, Craig.
Only if I love you, man. No, on the Bitcoin, I mean, it's still struggling to get back above last year's low. It's just in a period of compression within expansion. Obviously we've had a large expansive move to the downside, and now it's just sort of compressing. So I'm with Sarah. I actually like to look for failed attempts at expansion on these. So she was talking about coming up and making a nominal higher swing high and then failing back down into range. The same thing could happen to the downside. We could sweep out, not the low, right, from February, but like we could punch through March low, for example, and then come back up through range. It'll do a lot of those little kind of trades. Until it makes a bigger decision, whether it's going to take another leg down or it's going to try to recover. But I mean, like, first things first, like, let's at least get back into last year's range before we get too bullish. I'm long hyperliquid. I hate to like jump on that train. Like, there's so many people on it, but like, I'm still long hyperliquid, and like, it's performing radically different. I just feel like there's a lot, and we talked about this. You talked about this, Craig. I just feel like a lot of the thesis on Bitcoin has changed a lot after so long of like, this was like our currency, right? Keep your hands off of it. And now like the government is like all over it. It's kind of like, what's the point anymore now? So I don't know. Not in love with it, but we'll see how it trades.
Yeah. I mean, well, we have some experts coming on right now to get us through and really see what the Bitcoin is likely to do, as well as the rest of the crypto asset class. And we were able to get the show perfectly aligned with Rory taking the Masters. So now no one has to focus on that anymore, and everyone can focus on the crypto closeout here coming up here on NinjaTrader Live with Trader Mayne and Ponzi Trader. Guys, have a great week, and look forward to checking on with you in chat. And we'll take it away, guys.
Hey everyone, welcome to another episode of the Crypto Closeout. How we doing? I missed last week's episode. Did you fare okay without me?
I did all right. I cried a little bit. I was shivering, hoping that Follis would be matching me, but he was not. So
yeah, hoping he would stay, and I was never going to come back. I was actually gone forever. Man, you got the Masters merch going on. Looking pretty good, dude.
I'm maxed out, dude. I'm maxed out.
That looks super fun. Well, I mean, guys, welcome. Another episode of the Crypto Closeout, sponsored by Kraken and NinjaTrader Live. The ladies and gentlemen on the last segment there just called us experts. They said experts are coming on to talk about the Bitcoin, is how they followed it up. So that is exactly what we're going to do here. The market has been very choppy. I mean, I know you've taken, I think, similar trades to me. I've focused a lot of my attention to other stuff. I think there's been other more interesting markets on the equity side, on oil, obviously, than Bitcoin right now. But we'll give you guys our thoughts on where we think Bitcoin might be going. We'll do our best armchair geopolitical expert impression, talking about now the unblocking of the Strait of Hormuz, which is now being reblocked this time by Trump. He says, you're not blocking the Strait of Hormuz. I'm going to block it. So what do you think about that? Do you think this is 4D chess, or this is just the continued shenanigans?
Look, I have been on the same bus this whole time. I think it's all bullshit, truthfully. In my opinion, the 14 days that they put the ceasefire on was a great amount of time for them to restock on munitions, deploy more troops on the ground, get more resources out there into the area. And now they're just kind of waiting for the ceasefire to fail before they, take on more action. That being said, I've been putting on proper positions for this thesis with crude longs via NATO and hyperliquid, and also TradFi equity shorts. I'm pretty short on TradFi. Kind of got squeezed on Friday, but I survived most of it. I wasn't too sized, so now I think we really are in for a treat this week. It's going to be, in my opinion, chaos. But it's going to be chaos, organized chaos if you're positioned accordingly. So should be fun, man. Should be fun.
Yeah, I mean, so let's head over the charts and we can kind of go through what we're looking at here. To be honest with you, this type of market, headline risk driven market, in my opinion, is the worst type of market to trade. It's my least favorite for sure. I almost long for the days of Biden speaking once every 6 months, and we could just trade the market and trade price. Whereas now, at any given time, 7 days a week, 24/7, much like crypto, Trump also never closes. He's tweeting, he's talking, he does an unbelievable amount of interviews and press conferences. It's like, I thought he just had a press conference. Next day, he's talking to some other person, saying something completely different. So I'm trying my best just to focus on the chart itself. And unfortunately for bulls, I think this bounce was something that I was expecting, but in that, I'm expecting this purely from a mechanical perspective. I don't believe that this is the bottom. I don't believe that this is bottoming structure. It looks nothing like bottoming structure for Bitcoin. It actually looks a lot like this prior consolidation that we had before we eventually broke down. Similar to what I believe Sara said on the last section there. I would love to see one more push above the highs. I don't know if it gets to 80. That was kind of my target for a bearish retest. That being said, on the last consolidation before the dump, I thought we were going to go to 110, and we capped out at 98. So I don't know how high this mechanical bounce goes, but that's what I believe this is. I believe we're in the process of putting in another lower high, and I completely agree with the analyst from the last segment. I think Bitcoin has another low coming through the summer here, and we're going to take out that $49,000 50K low. What about you?
I completely agree. Honestly, this week or the last week that you went MIA on me, we got some good trading in. And if you've got my setup here, you can see this was probably the easiest trade of the last 2 months. I call it the single line based analysis. And it's really what, as described, a single line that denotes resistance with an impulse, turning it into a proper trade. A flattening bottom, you get a solid compression, and it all, practically traded to that range highs. And we kind of got a very, very slow momentum towards the end of it, which, turned into a proper short. The only side I really took was this long side. Besides that, I've been, maximum hyperliquid and lighter coin maxi. I'll show those charts in a second, but I'm on a macro perspective. I'm looking at the same thing here. I still think maybe 80s, but there's way too much headline risk and way too much, emotional driven markets at the moment for us to even get that, 80, 79.
What is your thoughts on this? Because I was thinking 80s as well, but I was expecting this rally on the S&P to take longer. I thought by the time we had this move back up to 6,800, because really we were in a month-long downtrend on the S&P. We topped out at 7,000, and it took all the way from end of February till basically the beginning of April to get down to 6,250, and then we got back up to almost 6,900 in 7 days. So I figured, I was expecting this lower high. I know you were as well. This is kind of the optimal spot for them to project this thing if they're going to. But I was expecting that if and when the S&P had this big kind of correction before lower, Bitcoin would have traded higher. I was kind of disappointed that we only were at the range highs by the time, in my opinion, this counter trend balance is potentially ending already on the S&P.
Yeah, this is a dream setup, in my opinion. As a guy who doesn't get many of these setups, to me, this is going to be lower high, and it's going to be met with some sort of headline this week. And it set me up. That impulse, that's a very, very, very it's a gross impulse. It's not very clean, and it's probably going to get gap filled, as they spoke about earlier in the show. But I don't think it even comes back to new highs. So the risk reward here is optimal for a bear. I'm not traditionally a bear. I don't really hold swing shorts long, but to me, this is I don't think we get another one of these here that we did at last year's Liberation Day. I think we get proper momentum, slow roll, and even if we get a bit closer to the highs, we're way too close on that resolution for the 14-day ceasefire. This war's not over. I don't think this war's over. And as we slowly creep in towards the end of the week, there's going to be some dramatic headlines. The only way I think that we could possibly get a Liberation Day style move is if they actually end the war, which I'm pricing that at like under 10%. I don't think that's happening. It has to be a full regime change. Alongside, Crude is just absolutely crushing it. I've been trading this all week. One of the sickest trades of all time has been birthed out of the last 10 days. A lot of people missed it. And a lot of people interpreted the data differently. What happened was Hyperliquid and NATO and all of these perpetuals, even Binance, Bybit, they offer crude perpetuals. And what's happening is it's a perpetual. So it's kind of basing off of a roll of futures oil contracts. And so at the end of the month, or at the beginning of the month, rather, these oracles, they end up taking June and May futures and rolling the pricing so that they can slowly transition into the next month of pricing. And because of that, it's almost as though traders get a guaranteed 2% drawdown because of the backwardation right now. You have a massive spread. It was $14 at one point. I think it's $8 between the futures contracts. So you had a lot of delta neutral funds putting on shorts on, perpetuals for oil. And that created a massive dislocation between Oracle and mark price. So we had incredible opportunities to capture funding. And the best part about this is that if you're naturally bullish oil in this spot, you're just getting paid to naked directionally long oil. So it doesn't even have to be a complicated trade. So when that happened, oil was trading at like $93, or crude was. And I was getting paid 7 to 10 bips an hour to hold an oil long, which was a no-brainer. So I don't know, for the last 4 days, I've been collecting oil funding, and the roll stop. It's a 4-day roll, so it'll end on the 14th. Mm-hmm. And when it ends, obviously funding will return to normal. And the delta, as long as all of these funds, these delta neutral funds, end up flattening their hedges, and then we should see funding return to normal. But at that point, I'm thinking oil's trading above 100 again. So it was, to me, my favorite trade of the last few years. And it wasn't the most profitable because it's a new instrument, so I haven't put on size, but it was just the most obvious.
Yeah. So I think this is a good lesson as well for those of you that maybe are TradFi centric, you're not really into crypto. A lot of the things that can be frustrating when you're trading TradFi, these contract rollovers, these gaps, these, the weekends where the market's not trading, after hours moves, none of that exists in crypto. Because the market's 24/7, there's this advent, as Ponzi mentioned, of things called perpetuals. And we have a funding rate that kind of adjusts for all of these things that no longer exist. And there's absolutely alpha in understanding, first of all, how the mechanic itself works. And then, as Ponzi demonstrated here, you can actually capture some gain if you game it correctly. I think on the flip side, you got to be very careful, because there was a lot of people I saw on Twitter, at least, who were shorting oil and didn't read or understand how the hyperliquid contact worked. And they're like, wait a minute, so I short oil, it went down, but I'm not making money because I'm eating it on funding, basically. So it's very important, almost like understanding all the different Greeks and options. You got to understand all the things that are at play when you're trading perpetuals, and funding is one of them. If you come from TradFi, you might not be used to this. Just like crypto people, I know crypto people who went like long oil, on their brokerage account, and then maybe didn't close, and now that contract's coming to expire. It's like, yo, you might have to take delivery of some barrels of oil. Yeah. That's a real thing as well. So we have funding, and in TradFi, you have to take delivery of the asset if that contract expires and you're still holding it. So go for it.
What happened in COVID era when they were paying people to take delivery of?
Yeah, well, oil was negative, right?
Yeah.
So you could get oil, I guess, negative prices, and actually get it delivered to you. Get paid to take these barrels of oil and, I don't know, store them in your basement. But it's been crazy. There's definitely been some trades. There's been some spots that have been good, but to me, this is like, at least for crypto, in a vacuum, this is my least favorite type of trading conditions. But at the very least, it's acting very predictably. Like, I'm looking on Twitter, I'm watching online, and the sentiment has been the exact same every time. Last time we were at the range highs here back in January, everyone was saying the same stuff. Do not fade this multi-month range breakout. Oh, crypto's getting interesting again. It's time to pay attention. I'm like, I don't know, guys. This looks like a textbook bearish retest. Now, I'm open to the idea of crypto trading higher from here, but nothing in this chart makes me believe that, this is bottom. And if I go to something like ETH, it's the same thing. I legitimately see ETH trading like potentially as low as under $1,000 this summer. Like, this chart looks horrendous to me. And even if this gets some sort of stronger bounce out of here, I think 1380 is a magnet. And I think even sub 1,000 is a magnet on ETH. And I have to participate at those levels on ETH. I believe that is such a discount on this, gravity defying coin, because it is so heavy. Even with 0G, it can't go up. I almost have to pay attention at those levels. And to altcoins credits, there's some alts, like I was looking at Near the other day, where I'm like, okay, I'm not saying that this coin does anything. Most of these coins do nothing. I don't think this coin ever goes back to all-time high, probably. But some of these coins are getting so, smoked so hard that they're almost starting to look interesting. Not yet, but there's going to be some multiples out of some of these coins, when the market does eventually turn around.
It's these times when you get a nice accumulation. Speaking of which, it's 15 minutes time. You know who we have as a guest today, Mayne?
Oh, we do. I almost forgot. We've got Big Cheds coming on, so I'd love to hear. I'd love to hear his input. Why don't we bring on the boy, Big Cheddar?
What a setup!
What's up, man? Good to see you again, dude.
What's up, boys? There's a lot of alpha going around here.
Yeah, man, awesome. Well, we appreciate you coming on, dude. So we're just shooting the shit here. Yeah. No real format here. I'd love to kind of get your thoughts on. Ponzi and I are still, I think we agree, kind of overall bearish. We're at the range highs here. Maybe we go a little bit higher. I know you trade a little differently than us. You use Bollinger Bands, some other indicators, time-based stuff. What are your thoughts on the market as a whole? Bull market, bear market? Where do we bottom? Where are we at now?
Yeah, that's a good question. Well, if we're talking about Bitcoin, definitely I pretty much agree with most of what you're saying. We're clearly in, I don't know if you want to pop my screen up or whatever, but we're clearly in, the primary trend right now is a downtrend here in the daily chart, right? And we talked about that. I think everybody was watching for that weekly 50 rollover. Boys, like we saw in 2021, we started to lose that weekly MA 50. And just the debate is, is the cycle of peak to trough still in play, right? Do we have to drop 70%? Do we have to drop 80%, right? We all kind of know when the top hits, we start to lose the 50. For example, we had kind of a failed throwback. We had this nice, inverted head and shoulder continuation. We couldn't hold there. Kind of popped and did our bear flag. We couldn't hold here at kind of really important level. And, we're clearly in bearish consolidation, right? And a lot of people talked about the length of consolidation, whatever, 8 or 9 weeks. And it's at a point, the way I look at it, I don't know if that really added much alpha there, but we're clearly slowly digesting this range, right? There's a concept where you have to really pay attention where the price is previously consolidated. There's a lot of price history here. It was unlikely to just drop right through this range. So we're clearly digesting that range. It also happens to line up, though, with the 2021 peaks. So even though it's terrible right now, it is still technically a candidate for a bottom. It's a candidate for a bottom. And I say this as someone who's been calling for 35 to 45K, and I made that call up here when we lost the 50. But I still have to be open to, you kind of want to be able to articulate both a bull and bear thesis, right? So you want to ask yourself, even when you have a really strong opinion, you want to know, where would I be wrong, right? If I think it's going lower, where would I be wrong? And for me, the first real level to reclaim is going to be, 84, 85. When we kind of get back up into this range and we start to hold that, then it maybe really, I'll question my thesis. But in the meantime, I'm just viewing this as likely bearish continuation. It's the type of thing where you think about momentum, right? And to reverse momentum, if you're a bull, you want a quick drop, right? Because you want an overreaction move, Mayne and Ponzi. You want to have that kind of move too far too fast, you get a snapback and you start to build momentum. And slow bleeds just kind of lead, to going lower. So I'll say that we're in likely bearish continuation. I have been saying I think 55K is in the cards. I'm kind of watching that as the next level, the bottom of this structure. There's a whole concept, say you advance, and then say you form like a bull rectangle and you break out of it. When you come back, if you fail to hold in the peak of the range, you have the propensity or the likelihood to test the entire range and the bottom of the range. So the bottom of this range is very much in play. But I just want to echo some stuff I heard you guys talking about. Like, it's just kind of can I swear here? It's like a shit market, honestly, because it's like headline sensitive, like Mayne said. You can have a good plan, then there's a tweet, there's an untweet, there's a truth and untruth. So you've got that, and then you have the fact that if you look at the daily chart, right, like every moving average is sideways, right? At least the ones I'm using, MA20, simple moving average, equally weighted. EMA8, exponential, more price weighting to the recent candle. MA50, everything's sideways. So trendy markets are easier to trade, right? If it's a strong uptrend, you buy the dip. If it's a strong downtrend, you sell the rip. And when you have these kind of sideways markets, the techniques don't work as well. It's much more difficult. It's consolidation, choppy consolidation. For a real playable, trade on Bitcoin, we got to start to clear range peak 76K, right? Maybe interact 62.5, and if you want to play in the middle of the range, you're going to get in a lot of trouble, I think. But I do want to throw out, like a fun, counterintuitive structure, Mayne, right? You said you don't see anything here. Peter Brandt, my colleague, there's a concept of a compound fulcrum bottom where you have a head and shoulders at the bottom of a mature downtrend. You actually, in theory, could be forming the compound fulcrum bottom here, which is kind of a funny pattern, right? And it really just shows that bulls are trying to bounce out of a mature range. You can drop back. But this initial move, breaking that lower high, kind of some indication there's a little rumbling from bulls. So, but what do you do with that, right? It's like you can name a pattern, but it all still boils down to what's your trigger level. So it's still 76K, right? So I can say, okay, maybe compound fulcrum bottom is still 76K, right? It's one of those things where like people argue over, the name of a pattern. It really just boils down to where are you executing your risk and like how are you defining it? Like when am I wrong? Type of thing.
What's funny when you like zoom out a little bit to where you're showing me the previous highs.
Yeah.
Like in hindsight, right? Yeah. Like we can say you zoom out a little further so you can see even previous highs. I'm talking like a daily. Is that a daily? Look at a 3-day or something.
Yeah. Okay, you got it.
So we're like, okay. If you think about it in hindsight, like this would be an optimal place to put in a bottom. Now, I don't mean like I don't mean that we're perfectly bottom, but like at least start to form a bottom. And what I want to see is probably a wick into that blue box you're drawing. But if you zoom out, that's like textbook, flip previous resistance into support, do a little consolidation right on that support, and then continue into a next cycle. Obviously, it's not traditional for our 4-year, thesis. But in hindsight, you look at this chart and you're like, shit, I should have been buying it all right here.
Maybe it gives us an over under of that level. We have a move below, and then the reclaim is kind of that confirmation that you buy. I think part of it as well is just the diminishing returns we're seeing in Bitcoin as it grows. Where back in the day, it's like the idea of retesting prior all-time high was never going to happen, and now it's like, well, actually, this is pretty common. And if you go look at the cycle before, right? I mean, we had a very similar setup. Like, so if you go all the way back to 2017 and you draw out that high, well, guess what? Where did we bottom? It was not that far off of that old all-time high. We came, we tested it, we put an overthrow to the downside, reclaimed, and then ran. Maybe that is something similar that we have here, right? Where we're going to have this kind of overthrow, and then, that is where the bottom. And I don't think that that's that crazy. Like one thing I keep harping on with people is like, we're well into this thing already. And I think we bottom early Q4, late Q3 this year. It's Q2 already. So, that time frame is not that far out when you think about it. Something interesting on the last segment they talked about was, and this is something I've struggled with as a crypto person is, crypto used to be this anti-government, blah, blah, blah money. And now they're like, well, now the government is all over it and it's all involved. And it's almost like this is how it had to be. like for crypto to reach, exit velocity, mass scale, actual adoption globally, the government and traditional banking systems, they had to get involved. There was no way that this thing was going to go to $1 million one day and be worldwide recognized and used and known if it was just us basement dwellers, holding all the cards. The big boys had to get in the room one way or another. It is a little bit sad, but it's kind of like, you're sad to see that part of it end, but it's also exciting at the same time. Whereas where I disagree a little bit, he's like, yeah, what does it mean anymore? And I was like, well, it's maturing is what it means. Even though it's been around for a long time, what we're seeing is a maturation of this asset class where it's too big to ignore. The banks and the governments have to pay attention to crypto right now, and in general, because of how big it's gotten. And to me, someone who's been in this a long time, it's sad but exciting at the same time.
Would you say, gentlemen, like if you look at like 2017 to 2022, was this interesting intersection of where, it was too big, it was too in the system for them to kill it, but they weren't fully into it. So we had these really nice like altcoin gains and DeFi gains, NFT gains, and now like they're in it, right? Like they like the system, right? So there's just, if they were going to kill Bitcoin, they probably would have killed it before like 2016, 2017. But like it's that 3 or 4 year period was the sweet spot, right? Where we didn't have the diminishing returns. And now, like if you look, for example, what's notable, right, with Bitcoin in a higher time frame is actually 2022 was the first time we'd ever broken below a prior all-time high.
Yep.
It never happened before. And we actually spent that most time ever, below like the weekly 200, which is just a simple moving average, 200 period weekly close. So it's just over time, it's slowly kind of compression, like volatility compression, right? Slowly, right, over time. But it's interesting to note like that sweet spot of those several years, like before it was cool, but it was
back
still,
in my day, bro. That's how I feel about everything these days. I just feel so old and curmudgeonly. It's like, oh yeah, back in my day, crypto was better.
Dude.
Crypto Twitter was better. Everything was better.
But there's still some juice though, right? A couple altcoins look pretty decent. You guys want to riff on that, or what do you think?
Yeah,
man. Let's rip it. Love to see your list.
Yeah, I mean, it's not like a huge list, sadly, but like, for example, obviously hype, right? Hype looks pretty good. We'll clean it up.
Agree.
Sometimes you have too many markings and you have no idea what you're looking at. But you very clearly see the trend break, the acceleration out of it, kind of a rising demand structure, rising bid, all that. And then it's kind of doing this stair step, right? So we kind of see that. So, hype looks pretty good, reclaiming the trend. Doesn't mean it's going to immediately break out, but, bulls have mojo. So I think that looks pretty good. Obviously Zcash, right? Zcash and that 260 reclaim, I think was significant from a momentum standpoint. Whatever you want to call it, kind of a 2-level filter, breaking like a falling supply trend or a diagonal, and kind of these lower high breaks. So, obviously Zcash looks pretty good. I don't have an opinion on the fundamentals. People talk about it as like a privacy choice. I'm pretty dumb in fundamentals. But obviously Venice token looks pretty fat. I mean, that's a fat, juicy pitch. That's been nice. And that's some nice bullish consolidation. You kind of can just look at this structure. There's a nice little bullish coil, breaking out of that. That looks pretty good. And then there's someone kind of on the edge, like this one, DEC DXE is looking pretty good too, right? But there aren't that many that look, and you go to the higher time frame on this one, and you kind of see it's kind of breaking the trend. Nice important recapture of like 730. There's a few like decent charts, but all the like older stuff just looks garbage, right? Like Doge and even like Solana getting ready to break down. I think Solana's getting ready to go to like the 50s, at some point. So yeah.
Cheds, you're someone who uses a lot of moving averages and whatnot, and I find that those sometimes can be very helpful for mapping out bottoms. Do you see any altcoins, or do you have any tips or tricks for the audience to use moving averages to maybe say, hey, these are generally like long-term value areas for some of these coins? Because a lot of these coins look absolutely battered. But the problem is they can get, 90% more battered before they actually turn around.
So I don't generally use like moving averages to identify a bottom, but like say, for example, this is just like a list of like garbage altcoins. There's some decent ones mixed in. But let's take like, Filecoin, right? That's just like a perpetual downtrend. So like, what would it take for me to think like Filecoin's interesting and turning around? I'll answer your moving average question. But what I generally do is kind of like a 2-level filter, right? I identify a downtrend, and it doesn't really matter, by the way, like how you draw this line, like wick or body. The whole point of a trend line is to identify structure. There's a filter around it. It's trying to get like the majority of the price. And then you want to look for like a major recapture. And so that'd be something like that here, where I look and see where like prior support was lost. So like Filecoin gets back up above like 315. That's interesting, right? And you say, well, I missed the bottom. Well, I mean, fine, but it's not about nailing the bottom. It's about finding a trend and to ride it. Like nobody's a genius to nail a top and nail a bottom, right? I'm certainly not. But if you can ride a trend, then you're doing pretty well. Now, moving averages though, right? So maybe back to Bitcoin. We'll go back to Bitcoin. We'll take a look at moving averages. Like, for example, everybody knows death cross 50 and 200. And there's all this nuance with a moving average, right? You want to think about the momentum. So let's say you have a rising MA200. So with like a bear cross, you'd rather have it happen in the first attempt because that shows momentum. But if it kind of comes and does this, then these moving averages are generally sideways. You want to think about momentum and force with the moving average, right? So you can do 50, 20, but I like 834. They're exponential moving averages. They're Fibonacci levels. So if I remove all this noise, you can see what the heck I'm talking about, and we just kind of get rid of all that. And we see like an 834, and the yellow is a little bit, you can't really see it that well, right? Sorry, but apologies for that. But so, for example, if you look at like the 2021 peak, every time the price attempted to bear cross, it held. 8 held. It finally bear crossed and rolled over. It was on the underside. And then we got a nice little move back up. So some people use like Coinbase or GDAX, whatever, like 1226. This is like a very common moving average combo Mayne and Ponzi. I like 834. So if you want to use a moving average crossover system, 510, you can use something like that, a short term, with a longer term moving average. And I think that's fine. But I generally like to, as a classical charting enthusiast, what I'm trained in, I like to use horizontal levels, clear, price structure where I can manage my risk. It's back up above 84. I can define my risk there, that type of thing. So, I mean, I threw a few things out there for you, but that should give you some sense of my
totally.
style.
I mean, I've always been a proponent of horizontal levels. For anyone who's followed me for a very long time, for that exact reason, is there's little to no subjectivity when it comes to a horizontal level. It's like, this is the level where it broke down. I'm looking for a reclaim. So if I'm looking at Bitcoin, for example, and I'm saying, okay, this thing's in a downtrend. So for all the people calling bottom, let's assume, that the bottom is in and we just don't know it yet, right? Well, I can just kind of just eyeball and say, okay, well, it's got to get above here for me to be interested. I mean, ultimately, I would like to see it put in a breakout in terms of like the range or the market structure, but if it reclaims this old floor, like you said, now it becomes interesting. And even though you missed the bottom, at least now that it's broken back above here, you have a point of invalidation where it's like, okay, well, if the bottom is indeed in and we're about to go make a higher high relative to this one, we should no longer go below here. And that gives you all of the ingredients of a trade setup, right? It gives you your entry and it gives you your invalidation. And those are the two most important things. I think a lot of people focus on target first. Oh, I want to catch the bottom. How high is it going to go? Your entire framework should be based around risk. Can I tell where this idea that I have is wrong? Because if you cannot do that, then you do not have an idea at all. And even if your entry is like, oh, I bottom ticked like Bitcoin here, and you're like, I long this, it's like, okay, great. Where are you getting out? Like, where's the eject button? And if you don't know that, in my opinion, you don't have a trade. So using things like moving averages and Bollinger Bands, etc. People always ask me why I don't use them. I say, well, if you have a really good read on price, you don't need them necessarily, but they can be great pieces of confluence. But I do think it always comes back to price action and those levels, right? Structure. And clearly that's what you do as well with those downtrend lines, those horizontal levels. Like, that's the ultimate decision maker.
I like how there's so many. Go ahead. Sorry. Go ahead.
I want to ask your opinion on a specific asset that I've been slowly eyeing. In my opinion, it's starting to roll over from a downtrend to an uptrend.
Yeah.
Will you pull up your chart and take a look at XPL?
What happened to Kita Coin?
Oh, dude, you didn't see what happened to Kita Coin last week? It went up like 40%, and then it round trip the whole thing.
Dude, I saw some mojo in this one.
So you got rich, is what you're saying momentarily.
Yeah. I only get rich.
Like, there you go, Mayne. There's your horizontal, right? Like,
is this the coin that Split Capital joined?
Zahir?
Interesting.
Zahir, right?
Bag work time.
Yeah. That's a bear market bottom sign.
So, Pond, I mean, clearly you've got some mojo here. You've got principal polarity, right? Lost support becomes resistance. It's clearly rejecting, and then it didn't reject. right? And you had a big sell-off. This is a nasty upper wick. I mean, you don't like that necessarily, but you reclaimed a key level. You're riding the EMA 8. You've got momentum. Doesn't mean it's out of the woods. I mean, clearly the trend has changed. Like you think about like a downtrend, red light, orange light, green, right? You have to go first. You got to go down. You got to go sideways before you go up. And this has clearly at least stopped the bleeding, right, from a momentum standpoint. So yeah, I would say yes. I think it's definitely shifted the trend, from a downtrend to at least sideways. And going
He's longing
forward.
more as you say this. I can see his eyes moving. I was like, oh, he's
Yeah.
longing more as Cheds is saying
No, I'm
this.
not long in this thing. I'm buying it spot. I bought a good amount spot, and I'll keep
So-
adding. I think it pumps at some point.
I've got a question for both of you. We'll start with Cheds, and then I'll go to Ponzi as well, and then I'll finish. How do you filter through the coins that you're interested in trading? So, like, a question I get all the time from my audience is like, because I'm boring. I trade Bitcoin, ETH, and Sol primarily. And they're like, why aren't you looking at this coin? Why aren't you looking at this coin? It's like, well, I go through my 3 main charts pretty much every day, and I'm looking for something specific to know whether or not I might have a setup on that chart on that day or that week. What is your process like to build out your watch list basically and say, okay, this is a market I'm going to now pay attention to?
So it's definitely interesting. I tell people, like, generally you want to have a pretty small watch list, like 10, 15 plays, because you need to develop muscle memory. And I've talked to you about this. We've done streams before and all that. And you've got to be able to look at something and have a gut read. You have a gut feel. I believe some of your commenters before I came on had talked about that. Your instinct. But so I have, I use Twitter. I see what people are talking about. But I do my coverage because I do reports for the members of Bitcoin Live, and I want to also provide alpha and value on Twitter and YouTube, just like you were in the mix. We're trying to put stuff out there. So I'm keeping an eye on what's doing well, and then I'll just watch it, and I'll have certain levels marked out. I'll understand in my mind if it captures this level, okay, then that's interesting, right? It also is a situation where most of the time I'm watching and doing nothing, waiting for volatility. So when volatility hits, I'll go through this list you see in front of me is just like a long list of random altcoins. And then I kind of have a smaller list. It's kind of generally the better stuff. And this one covering at Bitcoin Live, and I'll kind of add to that. So I have a smaller watch list that I focus on most of the time. And then when there's volatility, I'll kind of go look at another watch list and see if anything's jumping out, if I've seen a trend change, a kind of characterization change. I'm looking for important level recaptures. I'm looking for volume clusters at a bottom. We understand when the price is trending, you already have an imbalance in supply and demand, and you don't need volume to continue. You need volume to change that trend, right? You get a big battle at the top and the bottom when bulls and bears, try to fight it out. So I look for volume, I look for important recaptures, and ideally it's something I have muscle memory in. I'm never just going to jump into something because I see even Mayne or one of these really respected folks talking about something. I'm not just going to jump in. I'm going to study it and wait and develop my muscle memory.
Awesome. Thank you for that. And what about you, Ponzi? Like, is there a certain thing you're looking for? Because you scalp a lot more than me, for example. Like, do you have a alert system that say, hey, now it's time to pay attention? I know you do because I've been with you in public. So
Yeah, truthfully. So I mean, there's two angles here. The first one is from a scalping perspective, right? I utilize TradingView alerts all day. A lot of the assets that I'm interested in, I just have TradingView alerts. And what that really means for me is like the interpreter of what's happening is like if price reaches a specific level of interest, it's like, how did it get there? Why did it get there? How fast did it get there? And what is it doing there? And then once it's there, I can make a decision on that lower time frame trade. On the higher time frame trades, for example, I think one of them recently I started to pay attention to, maybe it was XPL, I don't know, but I kind of zoom out and, I tend to notice that altcoins will bottom first. And when I mean bottom, I don't mean they reverse the trend first. I mean, they start to flatten out on the selling first, just like when the cycle is ending, they sell off first. I think it's a very similar structure. But if we find ourselves in a range and we're just kind of like accumulating within this range, right? Let's say this was the range for a few months. What I'll do is I'll just set price alerts right above the range. And then when those price alerts go off, it could be months from now. I say, what is it doing above the range? Is it sustained above the range? What caused it? Was it a headline? Is it starting to actually pull out of this range? And then I'll start to mark out like higher lows. That is when I'll start to accumulate a spot altcoin. I don't tend to put on leverage and trade it unless it's starting to build momentum, because I don't want to be holding you know, if it fake outs back into a range, it's just like it's such a high beta asset. Using leverage with it is kind of unnecessary, and it becomes just like dead weight. So trading view alerts save me every time, everywhere, every day. I just always use trading view alerts, and then I'll start to map out like what structure looks like, what's happening at a macro level, are we bottoming, you know, that kind of stuff. Yeah.
Also, if Saturn is in, Mercury or whatever, that's important too. You know,
I swear
Yeah,
it is, dude. I don't even know anything about astrology, but I have astro quants that I'll message on a weekly basis, and I'm like, hey, what do the stars say for us this week? And if it lines up confluential with what I'm trading, it's a ping, ping, ping. You know what I mean?
hell yeah.
So it's
Whatever
so
works.
funny because I'm the same way, but like Bitcoin respects the rock, bro. It respects the moon. Like whether or not you believe in the stuff, I'm always like a proof in the pudding kind of guy. I'm like, you might think it's BS, but it works. So you
Crazy.
know, explain that away. So I'm kind of similar. I trade a little bit more high time frame. But depending on the time frame I'm trading, I use this indicator. There's a million of them. This one's by a guy named Spaceman BTC. Shout out to
Oh
him.
wow, I forgot he
Um,
was like
I'm
existed.
I'm I'm getting paid a lot of money for that shout out, by the way. So much money.
Mhm.
I like to look at highs and lows and opens of different candles, right? And so this is just an easy way to visualize that. I'm generally not trading the super low time frame. So maybe I'm not looking at like the daily open, but one of my favorite strategies is the Monday range. So last week we traded below Monday's low, reclaimed it, went to Monday's high. That's a trade I'm always looking out for. If we're trading below an old weekly low, an old monthly low, above a daily high and low, those are the types of things I'm looking for because I'm primarily a reversal trader. So I look for a level to get run, a key significant level to get run. I see if that reclaim happens, bullish or bearish, because I love that setup. Like the Monday range trade, the reason I like it is when we reclaim Monday's range, this deviation's my stop. Like I always tell people, I'm not smart. So I want my trade setup to be easy, simple. I don't want to have to think, okay, my stop loss goes 3 standard deviations below, this, times by this. It's like my stop goes exactly here. If we're actually going to trade up, that should be the low of the week on Tuesday. That's where my stop loss is going to go. My target, Monday's high and, hopefully higher. So that's what I use. And that's how I'm able to kind of comb through my list very quickly is I'll flip on some of these different opens and highs and lows. And then I'll just tick through Bitcoin, ETH, Sol. Sometimes I'll look at a few others. And if we're flirting with those levels, okay, I'm paying attention. I'll set some alerts. Otherwise, I'm chilling.
Which one is that? I have Spaceman BTC tools. I just don't have them on my chart. Which
Yeah,
one are
you should. It's called Spaceman BTC Key Level,
BTC key
version
level.
13.1. It's been some iterations, new colors and whatnot. But I've
Nice.
used this forever, and that's I like to keep it super simple. And so if you look, they mentioned this in the last segment. Like we're pinned between a couple of high time frame levels. Like if you go out.
Yeah.
I think it was Sara on the last section there was like until we get kind of above or below, this monthly high or this monthly low, I'm not interested. And I'm like, hey, respect. We're kind of pinned between a lot of levels here. That's why you see these all kind of crammed in next to each other. We're in a range. There's a
Yeah.
million different ways to illustrate this. You can use the Bollinger Bands, and on the higher time frames, the Bollinger Bands are contracting. I don't need them on my chart to know that. I can just look at the chart itself. But whatever works for you is what you should do, and something that you can do quickly, efficiently, and repeatedly. So Monday morning when you get to your desk, here's my checklist of things I'm going to go look and be systematic with it. So we've got a few more minutes left here at Big Ched, so I'm going to put you on the spot here. First of all, I want your Bitcoin bottoming price. You can give me a range, but we're going to hold you to this, and I will
Yeah.
send people to your home
Sure.
if you are incorrect. So bottoming price, and then bottoming date, and then all-time high for next cycle. And if you
Done.
want your reasoning for why you pick those levels.
Yeah, I actually put out this tweet. Okay, so back around here, I made my famous when it was 46. I said we were going to like 12K and we got to 15. I tried to replicate that. So back when we were at 96K, I said the run from 35K to 225 is going to be epic. So I think we're going to go. Our bottom will be probably like 38.7. I'm thinking probably like December 4. And I think the next move will be to about 225K. Now, the reason why I picked that level, just kind of from a momentum standpoint, right? So first of all, if you look at the peak to trough of all the cycles, it's been a little bit less of a drop each time. So when I forecast like 38K, that's something like it's like a 70% drop as opposed to 80%. So a little bit less of a drop. Well, why we get there from a momentum standpoint, we're going to eventually pause at 55K. And then there's a decent amount of price history, 45K. What's going to happen, I'm saying this, you want me to sound like I know what I'm talking about. So what's going to happen, folks, we're going to stop here. We're going to lose it and recapture. And that loss of 45K, which should be a bottom, will kind of force a panicking. So we're going to wick below 45K. We're going to recapture it. And then that's going to be in December. And then from there, right, ladies and gents, we're going to go at about 225K. So 38 to 225.
So you were very specific there. You gave us down to the hundreds. You said 38.7, which I believe lines up with the 78.6 fib, or pretty dang close.
Okay.
He said December 4th. That's the day. So mark it down in your calendars. Call it Big Cheddar Day. It'll be a national holiday. Everyone eats a bunch of cheese if this hits. And last question here, because we got 30 seconds left. You mentioned this kind of dip below 45K. There's also that nice yearly low there. Do you think there's some systematic risk event? Last cycle we had FTX, like the bottom was 20K. FTX gave us 15. Is Michael Saylor going to blow up? Is Tom Lee finally going to sell after he's lost God knows how much of other people's billions of dollars? Is there anything you see that could maybe cause that last capitulation low?
I mean, from a fundamental standpoint, any of those could be. It could be war. It could be Michael Saylor's arrested with a prostitute. It could be Tom Lee's arrested with a prostitute, right? Like, I don't know. It could be anything, right? Like, but I think it could just be a panic building event. And it also
Satoshi could be a prostitute. We don't know.
Dude,
like anything can happen in the market.
Yeah, he could be. Yeah.
Or she. Okay. I usually feel like something blows up. That's kind of what gives you that final low. Like the low's actually at a logical level. Mm-hmm. Last cycle, the low was at the prior all-time high, but then you get that event that gives you that last little bit of volatility, that last little spike. And so I think a lot of us thought it was going to be the DAT trade blowing up, but the DAT trade never even really happened. I think a lot of us had a lot higher hopes for the DAT trade, and there was going to be a lot more of them. It just never really got off the ground. It was kind of disappointing. But dude, thank you so much for coming on, man. We really appreciate it. Great to see you. I hope you enjoy the rest of your Sunday, man, and we'll talk soon. Thanks for tuning in, or thanks for coming in.
Congratulations and everything, and good to see you, Ponzi.
You too.
Later, man.
Peace out.
All right, something I want to talk about now that
Big Cheddar, my boy.
What a guy, dude. I'm so curious what he looks like. I'll find out someday.
He's got a cheese hat on. It's incredible. Like, committed to the bit. I love it.
Somebody asked earlier, and they asked about where to see the information for funding on perpetuals. So I wanted to touch base on that. Specifically for oil, the first thing you need to understand is what you're trading, whether it's Brent and crude. Okay. Once you identify which of the two you are trading between Brent and crude, you can go to TradingView and actually go to an overview of the contracts. And what this will show you is what each month contract is trading at. And they're abbreviated by CLK, CLM, CLN, whatever it is. Then you can see, obviously, as you go further out, the market prices oil to be cheaper in the future, whatever. Why this matters is because perpetual contracts are essentially the current month pricing. And once that month ends, they have to roll it into the next month, right? So the next month is trading at 96. So if you go to this or wherever you're trading oil, for example, at NATO actually just put a tweet out about how the roll happens, right? So starting on April 14th down to April 17th, in theory, if let's say that spread is, I don't know, it's $10, you can slowly capture technically it's a free short because that price has to go from 106 to 96 if that's what it is by the time the roll starts happening. That is where funding gets extremely skewed. So when these delta neutral funds try to capture that position, what they'll do is they'll short oil on NATO now, and then they'll buy the future contract of that, whatever that is, let's say June. Since most of them end up putting on a short on that venue, the book then tends to pay out people who are long. That's how funding works. It balances longs to shorts, that kind of shit. So wherever you're trading, the first thing is understanding where you're trading, how they roll the contract, right? And this is going to be something that happens every month for oil. Right now, it's just exciting because oil is trading up, so you're getting paid along it. So yes, this is where you do that. This is where you get that information. Then you can speculate. Use your LLM to put out a trade for you if you need to. I know we're all mush brain.
One of the coolest things about crypto, in my opinion, is there's so many different ways to express your idea for financial gain outside of just a pure directional trade. Like I know there's options and stuff you can do, but like in crypto, because of things like funding, because of things like poly market, there's so many ways where you can be like, I'm bullish oil. But like for me personally, I've been telling everyone, I'm like, the oil chart is so volatile. It's scary, right? Like you can be it's up 10% one day, down 10% the next day. You're trading that with leverage. It's very easy to get offside quickly. But if you're like, hey, I'm bullish oil because I think this quagmire in the Middle East lasts longer, you can go on something like Polymarket and you can put on a position just saying, I think oil is going to hit 150. And that's almost more like an option trade, like a binary option, really, like yes or no, it's going to hit this. And obviously, depending on the price you enter, will change the odds, but it's a lot more simplistic of a view. Or you could have a delta neutral trade just collecting the funding. So there's so many different cool ways that are unique to crypto that I think a lot of our TradFi listeners who maybe are bored on the weekend, because what would you be doing today other than watching the Masters? You could be trying to speculate delta neutral oil strategies to capture and arbitrage funding between hyperliquid NATO and the actual price of Brent crude. Yep. Doesn't that sound way more fun than watching Rory go back to back?
Exactly. And the other way you can speculate on that is, like, for example, hyperliquid is super institutional. So that there's going to be people putting that position on hyperliquid. So the funding's probably going to be more extreme. If you go over to NATO, where, it's maybe a bit more speculative and retail because it's a new exchange, and you want to put that same delta neutral position on, you're not going to pay as much in funding because you're probably not, you're probably the smartest trader in that venue doing that and probably not representing the full cohort.
And you're earning points. Like as well, Bingo. Right? Like you're also earning points on something. So I think there's part of the reason I think we wanted to do this show was to have crossover both directions, not just getting crypto people more interested in TradFi, but the other way as well. Well, all of these TradFi assets are now heading on chain. And just because you like trading, you want to trade oil on the weekend. So maybe you're now on NATO or Hyperliquid. Well, the next step is like, hey, maybe I'm actually going to start trading some of these crypto coins that exist. Maybe you start with Bitcoin and then you work your way down the risk curve. So we've got 8-9 minutes left here. I want to say it's going to be a big week, but it seems like every week's it's been big every week. Do you have anything that you're watching going into this week specifically? Any trades, any coins, any setups?
I have a thesis I've been thinking about all freaking weekend, man. And I'm going to start off by saying that Bitcoin is unreasonably strong for, every headline that comes out is a little less implicative on the price of Bitcoin in the majors. That tells me that there's an underlying strength and it wants to visit the highs that we're targeting. So I'm actually staying away from Bitcoin unless I'm trading it long. And I don't have a long thesis for Bitcoin, so I'm not touching it. But I still think it's a chaotic week for headlines. I think we're going to see a lot more escalation into the war and not out of the war. And with that, we're going to see, I think there's three trades really. There's long volatility, right? I'm looking to put a volatility trade on, whether that's VIX or whatever it may be. I'll decide that into the night over into Monday morning. I am short equities, TradFi equities. I am long oil. That's my thesis, and I'm doing that all through perpetuals. I'm actually not trading traditional finance products at all anymore. All the stock trading I do is on Kraken, and then all the derivatives, futures, anything along the lines is on chain. So it's funny. I'm a crypto trader trading crypto instruments, but I've transversed into the TradFi products on the crypto realm. But yeah, I mean this tape, like I've been watching the tape for 3 days, 4 days, and there is strength within it. So any ridiculous move I get to the downside on Bitcoin will be an auto long for me towards the bottom of the range. But nothing short right here in the middle. No. Anything I get towards the downside, I'm looking for longs.
Oh, okay. Got you. Okay, interesting.
And then anything up here, I'm looking for shorts.
Yeah.
But I'm less keen to short a breakout of this move because, that puts there's a lot of open air, in my opinion, in like between 75 and 80. It's got to be something like this where, we start to wick over the range, and then we just like slowly bleed back into it. And then I'm more excited to put the short on within the range, not so much the impulse.
Totally.
I'll start with small position size on the impulse, and then, as we momentum to the downside, I'll add. What about you?
I mean, I'm kind of similar. I don't have a real Bitcoin trade. I think the trade was last week. I took the long already on the upside. I would like to see one more push higher here on Bitcoin, but I would be looking to short that. I think May going into the summer here is going to be bearish for everything, not like oil and stuff. I more so mean risk. I think that this Middle East conflict, because basically the trade that you're discussing, that you're putting on, is the Iran war is not over. Like that is the trade, is that this is not over. This is going to get worse before it gets better. And I kind of agree. And I think there's a very easy trigger for the other side, which is like actual resolution. And it just doesn't seem like we're close to that right now. Now, if they come out and say, hey, this is a legit ceasefire, we've agreed on a deal, then, all bets are off. We're back to longing the dips and expecting things higher. Purely from a cyclical perspective, I don't think Bitcoin has bottomed yet. I think the best case scenario for Bitcoin is actually just sideways going into the end of the year. But I think a much more likely scenario is actually another leg down and then sideways going into the end of the year. So one of those two is kind of my base case high time frame. But overall, I think this is a headline driven market, short-term trades only. I don't really see a lot of swing opportunities. Now, do I believe $60,000 Bitcoin is cheap long-term? Yes. But ultimately, I think lower prices are probably coming, and you can begin that accumulation process slowly. People fixate on this idea of the bottom for Bitcoin. And if you just look at history, the bottom is never a candle. It's always a process, even throughout the bull run and the moves up. Like the bottom is not one single candle. You're not going to miss it. There's always a range. Whether Bitcoin's about to leg down or leg up, there is always a range. And specifically at the bottoms, the range is usually pretty predictable and pretty easy to see. And you don't need to be, a slave to the tape saying, oh my God, I'm going to miss the bottom if I'm not online, for this singular day. Usually you're going to have time. It's going to be obvious. And I don't see why this time is going to be any different. If you just look at the history of this asset, I think the bottom forms very similar to one of these prior bottoms where we finished these grindy up moves with a long consolidation. Something that Ched said that I agree with is this red light, orange light, or yellow light, green light idea of before something can go up, it has to go sideways. I talk about it in terms of slopes. So when something's selling off really hard, the slope's super aggressive, it's parabolic, then it kind of calms down and then you get the sideways, right? So I still think we're in the aggressive, part of this Bitcoin slope. It's got to chill out a little bit. The next low has to be less aggressive, and then you get that sideways. That's how it always happens. That's how it always works. Unfortunate. It's boring, but the good news is I think that Q3, Q4 is coming a lot quicker, I think, than people think. I feel like we're living on time by 1.5x speed here because every day I look, I'm like, how is it April? Like I don't. It's
also because you're getting old, buddy.
I am old, but you'll be old soon too.
I'm there.
You're catching up to me, actually. I think in terms of age, you're aging quickly. I've stopped aging. I'm aging slightly in reverse now. So we'll meet in the middle somewhere, maybe at 40, and we'll both be the same age, and then we'll hang it up. We got a couple minutes left here, man. Any closing thoughts?
Yes.
Anything you want to leave the audience
As
with?
you're speaking about sloping, if you take a look at my screen here, there is an asset that is sloping. In my opinion, it's bottomed, and I was wrong the first time, but I am very well rewarded for being right the second time. This, in my opinion, is what a downtrend looks like when it breaks, and this is what a throwback looks like. And we got quite the beautiful throwback. So it's very simple here. At this point, we want higher lows across the board. So I've been, it was a relatively small position according to my traditional position sizing, but I've been holding this long since 86 cents. It was originally 82, but I actually compounded on that throwback and I compounded a little bit here. And I'm looking to add, I think we do get conflict. So if we get conflict, maybe something like this, but I think ultimately like this is the low and we shouldn't go below it. And every single throwback we get down to this range again, I'm going to look to add. And I think this trades back up into the $2 range. So really high risk reward setup, doesn't need to be a really big position size. And then the only other asset I'm long is hype. These two coins are.
Can you show me lighter here on like the daily?
So I need to pull up a different chart because there's no price history. There's really no price history for it.
So just hide your drawings there and just scrunch it out a little more. Like, so you can already see, right? Like that, those first two big initial lows on the left, that is, if you draw a line from each of those straight down, like a trend line, that's your, on the very far left there.
The lows?
Yeah, the low to low. No, the one before that. And then to the second low there is your second point. Like that's your super steep parabolic downtrend. And then it's totally chilling out here. And now it's starting to go sideways. So this is like my sloping kind of theory in action here. You have that parabolic down leg. Then it starts to chill. Then you get that range. And it's as simple as exactly what you've done here. I do the same thing. You just draw a downtrend line. And you're like, all right, it's going to break this eventually. And that downtrend line will break before market structure actually shifts bullish. Before we make a higher high on, the daily, that downtrend line is going to break. And then that's kind of your clue to like, ears up. It's time to pay attention to this thing. So, awesome. Another one that you're going to long, shill after the fill round trip, and we'll discuss it in the next episode. 100%. Guys, this has been another episode of the Crypto Closeout. So thank you all so much for tuning in. We hope you're enjoying these so far. We're just starting to get momentum. We're getting warmed up. We're going to keep having awesome guests on as this show continues to grow. So thank you to our sponsors, Kraken, NinjaTrader Live. We will see you in the next one. Have a good week.